Have you seen your payments on floating rate mortgages go up with the last 4 Bank of Canada rate increases? If the answer is yes, I am here today to share with you an option to prevent your payments from going up yet again with the upcoming rate increase in September. A couple of weeks ago, the markets fully expected another 1.5% rate increase between now and early 2023. The good news is that this forecast is now changing a bit, and some are now calling for rates to stabilize a bit earlier. However, it's pretty much guaranteed that the Bank of Canada will increase the rates during their upcoming September meeting, scheduled for September the 7th, by another 0.5 point to 0.75. So if you're in a floating rate mortgage, you will see your mortgage payment increase after this announcement. However, there is a little known way to avoid this increase. And no, we're not going to talk about locking into a 5 years fixed. You may watch my previous videos on this topic. The 5-year fixed rates right now are priced at a premium. The differential between 5-year fixed and floating rate 5-year mortgages is about 2%. So locking in would mean locking in at the height of the cycle, and it's not the best option available. So what is the solution to avoid a payment increase? Well, let's get a little technical. I'd like to explain the 2 flavors of floating rate mortgages. The first flavor is what's called an adjustable rate mortgage. Under this option, the payment will change almost instantaneously when the Bank of Canada changes the rate. This product is good for you if you want the flexibility and the benefits that come with a floating rate mortgage, and you still want to stay on track for paying down the mortgage as per the original amortization schedule. Why? Because when the rates change, the payment changes to still ensure sufficient allocation to the principal pay down. The second type, or the second flavor, is what's called a variable rate mortgage. And I know the name is very, very confusing, and I'm sorry, I have no idea who came up with that name. But a variable rate mortgage is what you're looking for to avoid an increase in the payment when the rates increase. Well, at this point, I think you may be confused, and I don't blame you. Why would the payment on a variable rate mortgage stay fixed? Well, the reason is that with variable rate mortgages, the payment is designed to stay fixed, but the allocation of what goes towards interest versus principal is what changes. So beneath the surface, as rates go up, more of the monthly payment will go towards the interest payment. And as rates go down, more of that payment would go towards paying down the principal. Of course, there is a catch. So what is the catch? Well, there are 2 of them. The first catch is built into the variable rate mortgage is something called the trigger rate. So if interest rates go above the trigger rate, the bank reserves the right to increase the payment to a new set level. Usually, this increase in payment is higher than the individual incremental changes. The current forecast, supported by research out of National Bank that came out this week, is that for most variable rate mortgages that are currently in effect, as well as for new ones to be funded, the chance of hitting this trigger rate is currently very low, especially given the new adjusted rate forecast that I mentioned at the beginning of this video. Catch number 2 is that due to the fact that the payment stays fixed and more goes towards interest as the rates rise, the mortgage balance at the end of the term under a variable rate mortgage would be higher than the mortgage balance under an adjustable rate mortgage. So the bottom line, if you are looking for stability in your mortgage payments and want to get off the rate roller coaster that we're currently in, let's chat about switching from an adjustable rate mortgage to a variable rate mortgage. And we can definitely revisit your plans when things stabilize or change. My team and myself are here to help you navigate this environment. At this point, we believe that variable rate mortgages are a much better alternative to getting some peace of mind and sleep at night compared to locking into a 5 years fixed. If you would like to explore your options or would like to get a second opinion, contact myself and my team at info@streetwisemortgages.com. We are here to help you navigate this changing environment with a lot more clarity and with confidence.